if you're not careful, because we're all exposed to it, opinions of other people, whether it's our planners, whether it's our cousins, whether it's our friends, sisters, coworkers, at the end of the day, we're exposed to things and messaging that, quite frankly, could be very hazardous to not only our health, but our financial health. And today, equally as important, not only opinions of others, but opinions of financial institutions who have their own marketing strategy. Today, what we're going to get into is to stop letting the banks take your money. And in that process, we're going to really have a full education on exactly what the banks do when it comes to how they maximize their rates of returns at the expense of the dollars that we give them. Okay, folks, it's real simple, although it's complicated, because I'm going to give you information. It's going to sound easy. Every once in a while, people are going to say, Rob, that sounds great, but I'm not a millionaire. Or, you're talking only about millionaires. No, I'm talking about a mindset. And what I'm saying is modeling what the bank does. And the first thing that a bank does, if you wanted to open up your own bank today, it would take you anywhere between 3, 5, and 10 years. Basically, you would have to get surety bonds, background checks, a whole lot of money, other partners, people to have to kind of work with, and then eventually you'll get approved. And when you get approved, there's a high level of scrutiny, which is okay. But here's the point. At the end of the day, if I'm going to bring it and make it real simple, what a bank does over and over and over again is they loan out money. They don't take financial risk. They take credit risk, right? So for example, they call it the velocity of money multiplier strategy and or fractional reserve lending. If I had $100,000, I put it into a CD at the bank, they're going to take my 100, give me maybe 1%. And especially if it's in cash value, bank-owned life insurance, they're going to earn a certain rate of return on it. But then they're going to loan it out for a car loan, re-loan it out again for a mortgage, re-loan it out again for credit cards. And the various interest rates that are charged, typically at the end of the day, they make 40 cents on every dollar that we give to the bank. So if the bank has done this over the last 100, 200, 300 years, however long they've been in existence, and it's a model that continuously works for them, wouldn't it make sense if we educated ourselves after our 9-to-5s, created our own opportunities, and really understood what the bank does and begin to mimic that strategy on a monthly basis on how we're going to deploy our capital going forward? And folks, listen, I'm going to go short on this video. There's a lot of other videos behind me on this channel. Please take some time and listen to those videos because we're providing education every day. And by the way, go ahead and click the link below. If you have any questions, ask questions. If you want us to do other videos, tell us what videos you want to do. But let me just tell a quick story of the Vanderbilts and the Rockefellers. Now, by no means are we going to tell you that we could create the next Rockefeller. However, it's okay to research it. And it's okay to understand some of the distinctions and differences. Now, if we look at the Rockefellers, 6 generations later, the wealth, and do your own research, has gone from about $2 to $10 billion. You hear people talking about this all the time. They're going to make it sound like they're going to create the next Rockefeller. It's not happening. However, there's characteristics in what they do, right? There's characteristics on how they could really show us not only the wealth that we're making in our generation, but how to pass it on properly, not create spoiled kids, but through different LLC strategies, utilizing life insurance as a concept of a family bank where each and every person that has access or tied to that, they have to do A, B, and C and go through your own family education in order to benefit from it. So we are not talking about, hey, let's give one of our kids $10 million when they're 21 years old and just watch them blow it. That's not what this is about. However, if you're going to work your ass off like we are, we want to make sure that our money lasts hundreds of, if not 200 years later, based on the strategies that we deploy right now. And that's what the Rockefellers did. Conversely, the Vanderbilts, at one point they had more money than the U.S. Treasury. One of their best investments or best deployment of capital was Vanderbilt University. But there was a time that there was a party or some kind of family reunion. There was 100 Vanderbilts there. And as I understood it, because of how the original Vanderbilt left his and him and his wife's money behind, it was chopped up per person. Years later, 6 generations later, there was really no money left. It wasn't the same amount of money. However, there was one outlier. Gloria Vanderbilt, right? She taught her son from CNN, Cooper, a different strategy, and he's now worth $200 million. So it is about the mindset. Anderson Cooper did something that his mom taught him, which was the opposite of the rest of the Vanderbilt family tree, probably more in line with the Rockefeller family tree, and now he's worth about $200 million. Success leaves clues. Yes, listen, Anderson Cooper had secrets that you and I didn't have. I get it. Just like all these Rockefellers, they have access to information, and I'm not saying we're going to create the next billionaire, but why not the next multimillionaire, right? Why not create tax avoidance strategies, not tax evasion, but tax avoidance strategies that can help keep money in your pocket while you're teaching your children how to really maximize each and every dollar as well as their children's children. So for us here at Epic, one of the things that we always want to do, and there's no obligation on your part, we want to provide as much education as you're willing to take on. We want to be able to share with you strategies. Once we understand what your investment really mindset is, what your goals and objectives are, how you were taught generationally, what your thinking is about money, is it scarce, is it abundant, and how we could take all the different products that you may have purchased through the years from a bunch of different people based on a bunch of different opinions and put it together in a model and a methodology that sits and fits with who you really are, and put that down on a piece of paper and begin the education process. Go ahead. First of all, if you like the video, please like it, click that link below, share it as well. At the end of the day, there's going to be somebody here at Epic that's going to sit down with you, go over exactly what you want to review. Once again, no obligation. And at the end of the day, if you like what we do, we would love for you to tell other people about us, add some comments, and we want to be able to create as much opportunity for you as we possibly can based on how far you want to go and how much education you're looking for. Have a great day, and thanks for checking out the channel.